All right. Hello, everyone. Welcome. Good evening, good morning, good afternoon from wherever you're watching and from wherever you're listening to me from as well. Welcome to today's live trading session. My name is Ambrose, and I'm super excited to have you guys here for our very first live trading stream for this month with me. Welcome and happy new month. Now, if this is your first time joining an Octa live trading session or a webinar, you're in the absolute right place. Whether you're new to trading, whether you've been in the business for a long time, today's stream is going to go over a lot of things from strategies to we're going to talk a lot about psychology as well. And I'll introduce you guys to the Octa trading platform and its features as well. Now, before we dive into today's session and talk to you about some of the things we have today, let's warm up things quick in the chat. I'm going to ask you guys a question and you can drop your answer in the chat below. So what's one thing that you wish you understood better in trading right now? Now, it could be entries, it could be risk management, economy, mindset. I want to hear from you guys. Let's get talking. Let me know in the chat, guys. What's one thing that you wish you understood better in trading? Let me know in the chat. And if you can hear me clearly, go ahead and let me know your name and where you're watching me from in the chat. You can go ahead and let me know your name and where you're watching me from in the chat. The question remains, what's one thing you wish you understood better in trading? It could be your entry point, it could be risk management, it could be the economy, understanding the economic calendar. Let me know in the chat, guys. Once again, guys, welcome to June. Now, this month, I want you guys to also improve in your trading career, your trading business. Whether you had a great month in May or you had a bad month in May, this is a fresh slate. It's June. It's your new chance to trade smarter. It's your new chance to manage your trades better. It's your new chance to grow as a trader. All right. So in today's session, we're going to be covering a lot of things, but I'll just go over the disclaimer first. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute investment advice. Now, for those of you that don't know who I am, my name is Ambrose Ebuka. I have 6 years of trading experience, honed my trading proficiency and contrive various profitable strategies that include swing and scalp trading. Now, today I'm going to also introduce you guys to the strategy that I use, which is zone trading. And would look at the dollar index as well and see how the dollar index influences other major pairs. And you can also do this for yourself as well. So if you're in this call or if you're on this live trading session, very important that you stay till the end. Not only would you learn about my strategies and how you can apply it to your own analysis, I would also reveal a promo code that can give you 100% bonus on your deposit. I analyze gold, GBP JPY, and GBP USD charts with an outstanding accuracy exceeding 85%, and I regularly backtest trading strategies for effectiveness. Okay, let's look into the chart. Umid watching from Dubai. Welcome, Andrew from FCT Abuja. Welcome, Utsi from Grace. Grace from Nigeria, rather. Grace from Nigeria. Utsi Grace from Nigeria. Welcome. Farouk from South Africa. Welcome, guys. Welcome. Today we're going to look at the economic calendar. You guys know that whenever I, talk to you guys about strategies, I like to first look at the economic calendar, and then we'll talk about zone trading. We'll look at the dollar index. I'll explain to you guys exactly what it means and how you can also use the dollar index to trade major pairs like GBP USD, Euro USD, AD USD, NZD USD. You're going to learn all that. We're going to look at how this dollar index action or how the strength or the weakness of the dollar index influences other pairs as well. And would finally have a Q&A session where you get to ask me questions, right? So if you have questions, you get to ask me questions in the chat. And very important, I'm also going to ask you guys some questions. So very important that you pay attention to this session because I'll be asking you guys some questions at the end of the session as well. So the session is going to last for about 45 minutes. And again, you can use the YouTube live chat to ask me questions during this webinar. I'll check it from time to time and I'll answer your question. Augustus says he's watching from Guinea. Longest time. I mean, I've been having this live trading session, so maybe you're the one that hasn't been joining, but it's good to have you back on the session. And for every one of you that has joined, good to have you guys back as well. Now we're going to do a brief introduction to the zone trading, and then we'll go over the economic calendar. All right. So if you haven't already, you can grab a note or you can use your notepad. Get comfortable, and we're going to analyze the markets together. I'll teach you my strategies, each part. I'll answer your questions, and I'll help you make total sense of the market. Now, if you're ready to go, you can type "I'm ready" in the chat, and we're going to get started. Okay, so what is the strategy exactly? It's called zone trading, right? Zone trading. Now, if you're familiar with, if you've heard, or even read things about supply, demand, support, resistance, that's what we mean by zone trading. Now, imagine the market is a battlefield, right? Like a battlefield between the buyers, which are the bulls, and the sellers, which are the bears, right? Now, instead of trying to predict every single candlestick, which most beginner traders do, they want to predict the next candlestick and the one after that and the one after that. No. Zone trading focuses on helping you identify areas, zones where the buyers and the sellers are likely to clash. And because they are not single price points, because they are zones, you have to map them out as a range. A particular zone from this zone to this zone can serve as a supply, from this zone to this zone can serve as a demand. Just think of it as the territory of interest, area of interest, where some massive moves tend to happen. So I'm going to give you guys an example. Right. Let's use a clean chart. Let's see if we have a clean chart. Okay, I think we have a clean chart here. Okay. So we could have something like this, for example, something like this. And then, you can see the market starts here. Okay, so this is just, the illustration is just for example, right? Now, we have two types of zones. We have the demand zone, which is the buy zone. I'm going to put buy zone here so you guys can. And then we have what we'd call the supply zone, right? Now, the demand zone is a price area where buying pressure is strong. So it can be something like, I'm just giving you guys this illustration so that it's you can understand it first before we start to identify these zones in the market, right? And then we have here as well. So it's an area where buying pressure is strong. It's where the bulls say, this price is too cheap, let's jump in. And price often bounces up from there. One of the ways you can identify these zones, you can still use support and resistance as well. If you try to identify sharp movements to the top that begins from a base point like this. So when we have the market move this way, come down to create support, this area becomes an area of interest or a territory of interest for us. And it serves as a demand zone. Now, the thing is, the more price bounces up or bounces off of this zone, the stronger it becomes. And then we have the supply zone. The supply zone is an area, just like the demand zone, but quite opposite. The supply zone is an area where selling pressure is dominant. The supply zone is an area where selling pressure is dominant. So the bears or the sellers, they are saying this is too expensive, let's sell. And what happens? The price often drops from these zones. Now, if you're familiar with supply and demand, you notice that when you have a resistance zone and a support zone, and price, breaks below that support, it tends to become new resistance. So what am I trying to say? If we have resistance up here, and then we have support here, what happens when price breaks below support is this support area now becomes new resistance for price. The reason I want you guys to understand this is because the market tends to respect these levels. But you can only, I'm not trying to tell you to go ahead of the market and buy at these zones or sell at these zones. You have to create that awareness when the market gets to these zones. And that is what I trade. If I show you my dollar index chart, you'd see that over the years, we've been analyzing the dollar index from time to time. Every swing, every trend, every range, every move. And you can see it here. It's pretty clear that this market loves to move in zones. So you would wonder, why does zone trading work? What I want you guys to understand is that the big institutional players, the banks, the hedge funds, they don't just place one trade. They accumulate trades and distribute these trades over a zones. They accumulate and distribute over a zones. And all you have to do is to identify the fingerprints, because they leave fingerprints. You see sharp price reactions, you see heavy volume. For those of you that are into smart money, you see the order block formations. And what you want to do as a zone trader is to follow the giants. You're not trying to fight them, you're trying to follow the giants. Wait for the price to react at a key level, and then you to act at a key level, and then you react. So how do you trade the zone? Let's go back to this. Was it this one? Okay. Let's just take this off so I can. All right. So, how do you trade the zone? You want to identify your entry, right? Wait for price to enter the zone. You can look for reversal patterns. These patterns can be in formation of the chart or in the bottom of the candlestick, like the pin bars, the engulfing candles, just candlesticks that indicate strong rejection. And you can also add RSI divergence as an extra confirmation. You can use the moving average break or bounce as an extra confirmation. You can also use volume as well as an extra confirmation, right? But you want to identify the entry points. This is after you've figured out the zones. First, you need to look at the zone, and when you identify the area of supply, area of demand, you need the market to act upon. Are we getting a bounce? Are we getting a break? And then you identify your entry. And then what you want to do after that is to identify your stop loss as well, your area of or your area of risk, or the area where you want to put your stop loss. Now, a lot of traders just go into the chart and they execute trades, but they don't even know where they want to exit that trade, in loss or in profit. They don't know how much they want to risk. They're just executing based on, confirmation. But before you execute that trade, you want to identify where you want to leave the trade. And obviously, if you're looking for buy opportunities at the demand zone, you're looking for your area of stop or your area of risk to be below that demand zone. For supply, you're looking for it above. Now, if you're going to be focusing on candlesticks momentum as your final point of entry or your final confirmation for entry, I'll suggest you also use candlesticks for your stop loss. It could be the highs of the previous momentum candlestick. It could be a swing. But if you're using a swing for stop loss on the higher time frame, you would have huge amount of pips, right? Which is why I'm saying focus on candlestick. I think I'll just go to the chart and show you guys what I'm talking about. So, for example, right? So let's say you want to enter a sell trade here. For example, let's increase this. We can have a tight stop loss that is just right above this previous swing, which is also going to be above this previous swing as well. If you're using candlesticks, obviously you want to focus on the highest point of the previous bearish momentum candlestick, which is going to be here for your stop loss. Assuming you want to go for an entry, a sell at this point, your stop loss is just going to be somewhere around here, and then you'll be targeting take profits in this zones. Obviously here would be the first because of the market reaction here, and then we have the most recent swing low, which is this, before we can start to extend, right? So that's what I'm talking about. Now, when you're trying to identify these key levels and these key zones, you don't just identify the immediate one or the current one. You also look out for the next key zone. That can serve as your target. That can also serve as awareness for your risk. Let me know in the chat if you guys understand. Let me know in the chat if you guys understand. So this is how you can trade key zones. Now, for you to also be able to trade key zones, you need to understand how key levels work. Yes, we've talked about supply zones. Where is that? Okay. Let's go to the 1 week time frame so you can see this clearly. All right, perfect. We've talked about supply zone. We've talked about demand zone. We've talked about how you can, trade these zones, identifying your entry, your stop loss levels, all that. But before you even execute trades at the supply and the demand zone, you need to understand the key levels, these zones themselves. What are the key levels? Now, a key level, and just as I'm following up, okay, perfect. A key level, or key levels rather, are areas on your charts. You can call them price points, but they act as magnets for price. I'm going to show you guys what I mean by that. So if you look at this chart, you'd see that there are a lot of levels and lines and all that. But one thing you notice about these levels are, for example, let's start with this one. This was support that was drawn since January 2023. You can see that in April 2023, the market came down to find support here. We also have this one that I identified in July 2023, which, let's put that back, which the market came 2 years later to find support. And this is happening because we are on the weekly time frame. So obviously, it's going to take a long time. But these are examples of key levels, right? Support and resistance. Support is a level where price tends to bounce upward. Resistance is a level where price tends to, drop or stall. Stall, I mean, is consolidate. The more times a level is respected, the stronger it becomes. So, types of key level, we have support and resistance. I think I should just type it down for you guys as well. Let's see. Types of key levels. So we have support and resistance. Let's put this here. And then we have what we call psychological levels. We have what we call psychological levels. Round numbers like 1.1000, just like you have here, 1.101.00, right? 100.00, 98.00, 150.00, numbers like that. Traders love clean, quick to remember numbers, and these levels can also act like magnets and can also act like walls, right? So that's also an example of a key level. And then we have previous highs and lows. Previous highs and lows. It could be the previous high of the day, right? Just like we had here. This was the previous high for the week as at November 2023, and the market came down and also came back up to respect the high. and now it has created a new high here on the weekly time frame this January. It's also expected that the market is going to trade around and still trying to come trade in this area as well. So the days high and low, the weeks high and low, previous swing highs and swing lows. This is a swing low, another swing low. These are also types of key levels. These are areas where traders, like to place stop losses, breakout orders, buy stop, sell stop, all that. And we have another one, another type of key level that we call the Fibonacci. How many of us know the Fibonacci indicator? Let me know in the chat. If you know the Fibonacci, let me know in the chat. The Fibonacci. If you know the Fibonacci, let me know in the chat. This is what the Fibonacci looks like. These zones, 38.2, 50. Let me just try and see if I can duplicate this. 50 and 61.8 retracement zones. These zones are great for identifying pullback entries in a trend. All right. So keep that in mind, especially the golden zones. For me, I like to look out for the market trading within 61.8 to 78.6. That's the way I use the Fibonacci, and that's the zone I like to look out for retracements or pullbacks. Okay, what's going to be the final one? I think this is it. The key levels, the types of key levels that we have. Let me just copy it and paste it here so you guys can see it while we move forward. So support and resistance, psychological levels, previous highs and lows, and also the Fibonacci as well. These are the types of key levels. Now, what trading in the zone does is it helps you filter noise. You're not going to be trapped in the middle of nowhere or try to trade in the middle of the market. It helps you filter market noise, right? You get to see clearly key zones, key levels. The ones in between that you can see here, the ones that are in green, those are minor levels. But I also try to identify them as well so that I'm not left out on any information, right? But then it helps you filter market noise. It helps you build a plan. You know where to watch, how to react. And if you're using the higher time frames, which I, encourage you guys to use, it gives you that increased profit probability because now you're looking at areas where institutional, footprints can be marked, the big trades, the big volumes. You get to find out on the weekly, the daily time frame, and then you identify where they are. All these things would give you clarity and confidence. You're not chasing price. Now you're seeing the markets clearly. You're trying to map out the zones and see where the next area, the next key level where the market is going to react or the market is going to act, and then you react to that. Okay, so zone trading itself and the key levels, they're not just, technical strategies. They're also psychological battlegrounds of the market. It helps you build on patience. You get to think like a sniper. You're not just chasing the market. You're being patient. The market gets into your zone. You think like a sniper. You're focused. You're confident. Okay, so you're moving from chasing price like a retail trader to waiting at the key levels as a trader that has patience and purpose. Now, if you understand exactly how the zone trading works and the types of key levels, let me know in the chat, guys. If you understand exactly how zone trading works and also the importance of key levels, let me know in the chat. I just wanted to explain this for you guys before I talk about, the strategy and introduce you guys exactly to how you can use this in your own trading. But if you understand it, let me know in the chat, guys. Okay, so the zone trading strategy consists of market structure, right? Your understanding of market structure. I like to tell traders that at the start, when you start trading, you could come into the chart And then you see all this and it becomes very confusing. This is even going to be confusing. Let's use a clear and a clean chart, right? So let's say you come to the chart and you see all these candlesticks and numbers. First impression, I don't understand what's going on, right? You get to say, oh, I don't understand what's going on. I can't interpret this. But when you understand exactly how the market works, and this includes the patterns, the trends, the ranges, supply and demand zones, you get to see that there is something that is called an uptrend. There's something that is called a downtrend. And the uptrend and the downtrend are made up of highs and lows. You have swing highs, swing lows, you know, basic method of trend creation, right? You understand exactly supply and demand levels. And then the next time you look at the market, you'll be able to see a clear structure. So I'm going to ask you guys this question, right? Let's see if you can take off all these drawings. Okay. Looking at this US 30 market, right? This is US 30 on the weekly time frame. Where are we headed? Are we headed up or down? Is this an uptrend or a downtrend? We've not gone ahead to identify highs and lows, supply and demand zones, even though they're very visible. But looking at this market, where do you think it's headed? Upwards or downwards? Let me know in the chat. Let me know in the chat. Are we headed upwards or are we headed downwards? US 30 on the weekly time frame. Now, even before identifying key levels, patterns, whatever, where do you guys think we're headed? Someone says downtrend. He's trying to throw the question back to me, but you're expected to answer the question, not throw it back to me. Okay, Andrew says downtrend. Downtrend. UT Gray says downtrend. Ephraim says downtrend. Interesting. So no one thinks this market is headed upwards. Wow. Okay. I'm going to show you guys something, right? And explain exactly for also beginner traders, for those of you that don't understand what Andrew now says uptrend. You can only choose one answer. You can choose downtrend and uptrend at the same time. But just to explain for you guys, especially beginner traders in the house. Right. So we have two types of trend. Anything that is not a trend is ranging, right? It's consolidating, it's ranging, it's not moving. And just a quick one. As a trader, we need the market to move for us to make profit, right? Keep that in mind. Now, an uptrend is made up of series of higher highs and higher lows, right? So we have series of higher highs like we have here. Higher highs. And then we also have higher lows like we have here. And then a downtrend is made up of series of lower highs. I'm going to call this LH. And I think I'll just use a capital letter so that you guys can, yeah. And lower low. Now, having explained it this way, you guys will clearly see now that, okay, we are actually looking at a market that is trending upwards. Why? Because we have three consecutive, let's use this one, higher lows. Boom. Right? Let me take this away just a little bit so that you guys can clearly see. Yeah. Hold on. Okay. So what do you guys think now? Do you guys still think it's a downtrend or an uptrend? Let me know in the chat. Do you still think it's a downtrend or do you still think it's an uptrend? Let me know. What do you think in the chat now? When you connect two or more consecutive swing lows, you're looking at an uptrend, right? Now, most of you I would understand why you'd think the market is moving in a downtrend, but that's just you trying to be faster than the market. A lot of you guys will say, well, the market created a double top, right? Created a double top, broke below the neckline of that double top, and started trending downwards, right? But when you're looking at a trend, you don't invalidate the trend from a single pattern. Remember, just like you have consecutive higher lows, you need to have consecutive lower lows. The market is back into this zone. And this zone is important for us because we've seen the market create equal highs here, which means the market is going to try to create another high or even attempt to break above it. But whatever happens, if this market continues to trade above this point, we're still pretty much bullish on US 30. Let me extend this to this point. This would have been the area where you'd say, well, if we break below here, then we're beginning to come down because this was the previous resistance that took off the US 30 market from here, and then we started trending upwards. So this is an important zone for us in the US 30 market, right? This zone. Resistance created. The takeoff from this point led to everything that you see going on here, and then the market came to tap back into that zone and push back up. So as long as we keep trading above this point, we're still pretty much bullish, right? We can only look at the market's change trajectory when we successfully break below this key level. And obviously, we're going to see the market attempt a retest here and a retest here. And then the final one right here. So what do you guys think now? Uptrend or downtrend? Let me know in the chat. If you still think it's a downtrend, please let me know why you think it's a downtrend. I'm open to suggestions and opinions, right? But this is, the market is clearly moving upwards. I still expect US 30 to even attempt another retest at this point before anything else. So back to it. You understand the structure, the trend, and then you identify the key levels that we just talked about. This is what the zone trading strategy consists of. Your understanding of the market structure, which I told you guys about patterns, trends, supply and demand, all that. You identify the key levels. I told you guys the types of key levels we have. And you predetermine your entry and exit points. Your entry and exit can be candlestick confirmations, momentum, the moving average, the Fibonacci. Those can be extra confirmations for you to enter the market and identify your area of exit. You don't want to come into this market and enter, place trades without knowing where you want to exit. And I mean, some traders are guilty of this, right? You just execute a trade and you start looking at your P&L, right? It's just reading, and you're seeing $100, and it's just going $200, and you're like, well, if this market gets to 500, I'll close. I want to close at 500. You don't know if the market will ever get to 500 based on technical analysis. You don't even know if it's going to get past 500. You don't know if it's going to reverse before it gets to 500, right? But you're just looking at your profit, and you're like, well, I mean, this trade is super amazing. I'm up $200. I wanted to get to 500 before I execute. You should predetermine your entry before I exit, rather. You should predetermine your entry point and your exit point based on market structure, even before you click buy or sell. And finally, risk management, which is your risk to reward, your moderate lot size. So what kind of traders is the strategy suitable for? As you can see, all kinds of traders, the swing traders, the day traders, the scalpers, the position traders. Why? Because in every single time frame you go to, you must find a zone. There's always a zone in every single time frame. If you go to the daily time frame, there's supply and demand. To the monthly, there's supply and demand. To the 5 minutes, 1 minute time frame, there's supply and demand. And then when do you use it? During volatile sessions, like overlapping sessions, sessions where the New York overlaps into the London session. The market is usually very active at that time. Also after major news events as well, when the market has finished, making its wild move up and down, and then you can clearly see the trend, you can clearly see the key level. That's when you strike. Now, if you understand the zone trading strategy, which I also gave you guys examples, let me know in the chat. Let me know in the chat, guys. All right, we're going to quickly look at the economic calendar. Just do a brief run through because of time, so that you guys can still understand exactly what's going on here. All right. Perfect. Now, this is the Octa economic calendar. You can access this calendar from Octa's official website, come to analysis and education, and come all the way down to economic calendar, right? You can also access this calendar, excuse me, guys. You can also access this calendar from your Octa trading app, right? You see it in the navigation section. You see the economic calendar there. It's also really good to go through the app because additional information with the economic calendar on the app. That's another tip I'm going to give you guys. It's just advanced, more information. You can still get it here, but still good to go through there as well. So, if you're new to this calendar, pay attention to the dates, the time zone, so you don't miss out on the events. And you can also add medium and low impact event, right? But for me, I'll just keep it at only high impact events. If I put medium impact events, you'll see that there are a lot of extra events here, but just like the name goes, it brings about medium impact or medium volatility. I like to focus on high impact because it brings about high volatility in the market. Right now, imagine you're driving on the highway. I'm sure you'd want to know if there's a traffic ahead or if there's a speed bump ahead. Right? That's what the economic calendar does for you as a trader. It gives you a heads up on major events that can shake the market. It shows you the dates, the time of this news, the important news release, like reports on inflation, unemployment, interest rates, all this. And these events can move the market fast and move the market hard, especially in Forex trading, because you're trading currencies. And if you're trading gold as well, very important that you pay attention to the economic calendar. All right, so let's look at AUD trade balance. MOM means month over month. Now you can see here that when you click on this event, there's a definition for the event, and you want to pay attention to the last sentence. It says, if a steady demand in exchange for Australian exports is seen, that will turn into positive growth in the trade balance, and it should be positive for the AUD. You can see it right here. That's what you want to focus on as well while you're understanding what's happening here. So if you don't know what the trade balance is the difference between how much a country earns from exports, which is selling to other countries, and how much it spends on imports, which is buying from other countries. So if a country exports more than it imports, it has what we call a trade surplus. If it imports more than it exports, it has what we call a trade deficit. And Australia is known for exporting natural resources like coal, gold, iron ore to China and Japan. So this is for April. As you can see, this report is for April. And clearly you can see that the actual trade balance was 5.13 billion AUD, which is a surplus, but it's lower than both the forecast at 6.1 and the previous at 6.9. Now, what this means is that, yes, Australia's, sold more than it bought, but there was not much profit because, as you can see, it's less than the previous. Let me know if you guys understand. Let me know in the chat if you guys understand. Imagine you have a business of selling gold. Last month, you earned about $6.9 million. This month, you earned about $5.4 million. You're still making money, but less, right? And if you have investors, they could be concerned because investors like to count on high profits. So a falling surplus like this one can weaken the Australian dollar in the Forex markets. And then we have the Kaisen Services PMI for the Chinese yuan. How many of us trade the Chinese yuan? Let me know in the chat if you guys trade that. But again, you can read this, Purchasing Managers Index. It helps you measure the health or the strength of an industry based on surveys, purchasing managers in the businesses. And it's focused on transportation, it's focused on hotels, healthcare, retail, finance. The quick way to understand exactly how the PMI works is to look at these numbers, right? PMI above 50 and PMI below 50. A PMI above 50 means the sector is growing. A PMI below 50 means the sector is shrinking. Just like you have here, the index varies between 0 and 100, with levels of 50 and above signaling no change over the previous month. And a reading above indicates that the service economy is generally expanding, which is bullish. A reading below 50 signals that activity among service providers is generally declining, which is seen as bearish. All right, and then we have the ECB main refinancing operations rate, ECB rate and deposit facility, ECB monetary policy statement, ECB press conference. Again, guys, you can always read to understand exactly what they mean. As you can see here, the refinancing rate is basically the main interest rate at which the ECB, the European Central Bank, lends money to commercial banks in the Eurozone. So if the rate is low, it means that banks can borrow money cheaply, they can borrow more cheaply, and it encourages them to lend more to businesses and lend more to consumers. But if the rate is high, it means that the borrowing is now tight. But they use this to slow the inflation. And as you can see, we're having a 2.15% refinancing operations rate, which is the same with the forecast, but less than the previous. Let me know in the chat if you guys understand exactly these events and how to use the economic calendar. Very important. And I saw someone say they have a question. So if you have a question, please go ahead and ask me your questions in the chat. I'll be happy to answer all your questions. But to understand this, just imagine your bank offers you a 2.4% on your savings last month, but now they're offering you a 2.15%. You might just move your money elsewhere, right? Maybe to the US, the UK. That's how big investors operate too. And rate on deposit facility basically means the interest rate that the European Central Bank pays banks to hold their money overnight at the central bank. So if the if the deposit rate is low, it makes it less attractive for banks to hold on to cash. Let's see. I think I'm seeing some. Okay, understand. Perfect. Monetary policy statement. Obviously, I always like to tell you guys that these decisions, what they say, the central banks, what they say, their decision can heavily influence the market. The monetary policy is where the central banks, it can be the Federal Reserve, it can be the Reserve Bank of New Zealand, it can be the European Central Bank, the Bank of Canada. But the monetary policy statement is where the European Central Bank or the ECB explain why they made changes to interest rates. They explain economic outlook on growth, inflation, any risk as well. And then they also give hints on their future rate decisions, right? So it's like they're giving you a story behind all these numbers that you see here. All right. And then the press conference, obviously, where the president of the European Central Bank talks about a lot of things, answer questions from journalists. They try to find out what new information can be gotten, try to get the tone and the confidence of the president of the central bank to understand exactly what's going to happen in the coming weeks or in the coming days for the euro. Okay? All right, all right, all right, all right. Okay, so yeah, we have one last one, Epiphany. Now, if you don't know what Epiphany is, it's like a major Christian holiday that is celebrated in countries like Greece. It's like a public holiday, so banks and institutions will be closed today. There will be slower market activity, especially with stocks and bonds and banks in Greece as well. So, guys, if you have questions, please go ahead and ask me your questions. This is the time where I'm going to take all your questions. You can go ahead and ask me your questions in the chat. I'll be happy to answer all your questions. All right. Now, if you're looking to take your trading journey to the next level, I urge you and I encourage you to give Octa Trader a try. It's an amazing app. It's an excellent app. It's an excellent platform as well that can help you put all the strategies that you've learned today into practice. So you can sign up with the link in the description or the link in the chat as well, and you can start applying everything that you've learned right away. You can start with a demo account, and when you're confident, you can go ahead and create a live account. The Octa Trading app gives you a wide range of trading instruments with low spreads, fast execution, and zero commissions. It also has various educational resources, 247 customer support, and a strong commitment to funds and data security. Now, if you made it up until this point, congratulations. You have the promo code Ambrose E100, like the bonus that gives you 100% bonus on your deposit. This promo code gives you 100% bonus on your deposit. So when you want to make a deposit, you can use the promo code Ambrose E100, or you can go to the promo code section on your trading app, your Octa trading app, and type in Ambrose E100 and activate it on your deposit. Let's see if we've got questions. Okay. How do I make use of fundamental analysis if I'm a swing trader? That's a good question. And to be honest, most fundamental analysts and most swing traders make good use of fundamental analysis. The reason is because your understanding of the economic calendar gives you a broad and wide view of what's going on in the market now and even 2 months into the future. So if you just understand, okay, the unemployment rate is high, which means a lot of people are not getting jobs, this could potentially affect the dollar for the next couple of weeks. If the inflation rate is high as well, this could affect, right, negatively. Okay. And then it gives you that broad view of the market. So you're not just focused on the daily time frame, 1, 2 candlesticks, but you're looking 2 weeks into the future. You're looking 1 month into the future, just by your understanding of an economic event or a major economic event. Um, how does the news affect the market and how to trade the news? It's just the same way with trends, right? It's just the same way with trends. Things that trend around like a major news. So I'll give you an example. If you get an information that the central bank is going to increase the interest rates. Now, let's say, for example, you usually get 2% on your investment, and then you hear that the central bank is going to increase that investment to 5%. you're going to go and buy more, right? You're going to buy more, you're going to invest more. That gives the currency boost and value. That's just a basic definition of how it affects the market. Um, can you explain the gold in the same way? Guys, we've actually run out of time, so I'll be able to give you guys that illustration on gold or on the gold analysis right now. But what you can do is to screenshot this. And this is on the weekly time frame, by the way. Let's see. How do I get a mentorship class? So you're already on a mentorship class with Octa. So all you have to do is to just show up on this YouTube channel, watch the videos by not just me, but also other amazing experts that we have on the Octa official YouTube channel, and make sure you're consistent with showing up. Let's see. Do we have any other question? How do I link it to trading the SMC? How do you link what exactly? The strategy, or what are you talking? What are you trying to link? Let me know in the chat. While your questions are coming in, let's just do the summary. So we discussed the ZAP zone trading strategy. We looked at its components, suitability for you as a trader, and certain scenarios where you can apply it. We also reviewed the strategy on the live chat during this session. And we talked about some of the principles that you can apply to become a better trader. Now, this is what I want you guys to leave with. Analyze trading instruments to understand how they behave under various market conditions. Not just review your actions and reflect on your decisions to identify what worked well and what can be improved. Keep up with the latest market news and updates. You can use the Octa app for that. You can also use the Octa economic calendar for that as well. If you have the Octa trading app, you can use space feature for that. You can use the economic calendar. Now, about reviewing your actions, remember that you can only progress when you review and reflect, so that you can do more of what works, right? Use educational resources like the webinars, the live trading sessions to enhance your understanding of trading strategies and tools. Now, if you're in Nigeria, you can use the link in the description to join the Octa Nigeria Telegram chat and stay active. We give a lot of ideas, definitions as well. We also have an amazing one coming up where we define things in the Forex market and help you understand it better. All right. Okay. Guys, please take a moment to fill out our survey. Your feedback is essential for us to improve our future webinars. In minutes, you can scan the QR code on your screen, or you can use the link in the description to give us a feedback in the webinars. Let's see if we have any other question. All right, guys, thank you so much for being part of today's live stream, today's live trading session. Keep sharpening your skills, stay consistent, and remember, the market always favors the patient and the disciplined. Until next time, happy trading.